Welcome to my channel. I'm Dr. Romano. In today's video, I'm going to walk you through on which type of investment is better and suitable for your capital. As you've been following in the media, cryptocurrency is a very new industry, and also hedge funds are not so new. They've been around for quite some time. But the point is that somebody asked me a question. And that question was, is a cryptocurrency hedge fund better than an equities hedge fund? And he asked a very good question, because if you're a young person, you're more interested in cryptocurrency because that's your era. But it doesn't mean that it's actually good or bad. The big difference is that an equity is a stock, okay? And the equity markets is tons of stocks, and each stock is a company that produces a service or a good, a product, etc. Before we continue the video, to subscribe to my channel and do thumbs up. It's right there. It doesn't hurt to press it, and it helps me out a lot since these videos are free. Thank you so much. And because of that, you have the real juice of the company making money and not making money, and when they don't make money, the stock goes down. When they do make money, the stock goes up. When they come out with a new product, the stock goes up. And when they're not doing so well and that market's not doing so well, their company stock goes down. So you have reasons as to why stocks go up and down. And this is why the most lucrative market is the equity market, because you have so many companies to choose from to buy and sell, etc. It's called depth in a market. And when it's really moving, that's volatility is how they measure it. The cryptocurrency hedge fund, unfortunately, there's only a handful of cryptocurrencies out there. So to make a hedge fund, honestly, I think that's a very risky investment. Secondly, I know what happened with Sam Bankman. I'm not just talking about his hedge fund, Alameda Research or FTX, whatever it was. I think it's called Alameda Research. But the point is, you need to be really careful out there, because if you have an interest in investing in hedge funds, you would not invest directly in hedge funds, okay? You would invest in a fund of hedge funds. That's a portfolio of hedge funds. Just kind of like a mutual fund on the investment bank side, but a hedge fund is their own company. It's a small company. There's also big companies, but the majority are very small. The point is that the equities that they trade, there is always going to be a buyer and a seller out there. And this is very, very important, because they could short markets, they could go long or short, whatever it is. There's a huge buying and selling that goes on. And as of today, in 2023, as of today, it's December of the end of 2022, there's thousands and thousands of hedge funds out there to choose from. And all these people, they're trading and they're making a beautiful market become really efficient. The cryptocurrency type of market is not efficient right now because, Warren Buffett, he said something really good. He said, I will stick with what I know. The cryptocurrency has no real reason for it to go up or down. He said a stock has a reason to go up and down. And he's actually right about that. I couldn't ever figure out why he didn't like cryptocurrency, and now I understand why. Because there are certain people out there that are able to predict trends, okay? And when they don't have mental blocks, they're able to see those trends more clearly. For example, Forrest Gump. That's a character in a movie, but you get the point. So that's the reason I would never invest in a cryptocurrency hedge fund. and I will always stick with the equities market. I also like the commodities market, but the problem with the commodities market moves because of a major situation. And so in order to get it to really move, you need a changing economy to happen, a peaking of another economy to happen, or another market, such as you need to have a peak in the equities market for the commodities market to be also peaking. You have a lot more possibilities of it going up and down, and to measure those ups and downs and to analyze those ups and downs in the equities market. In the cryptocurrency market, the whole way that it came about, it should not have happened. And the reason, so I feel what's wrong with the cryptocurrency market. Okay, the first thing is people shouldn't be trading it. If they want to use it as a monetary exchange, like for money, then they should not be allowed to trade it. And the actual cryptocurrency program, such as Bitcoin, I honestly believe that it should be more stabilized. It shouldn't go up and down based on how many people are investing it. There should be a certain amount of availability, and based on that availability, that's the price. But it needs to be very expansive, because what's happening now is that in the beginning, people were able to put their savings in it, the young people, and they knew it was going to grow. But now, those people are pulling out of it because it's not going to grow. We don't know what's going to happen with the federal governments around the world. It's at a standstill because if China and Russia come up with their own cryptocurrency and back it by gold, and they would back it by gold because that's why they've been buying so much gold, well, the US government would have to do the same thing because we are the reserve currency. So when you understand that if the Russians and the Asians are going to do it, well, the Americans have to do it. And so what's going to happen to the actual market of cryptocurrency? The market would actually be, the money will get poured into the cryptocurrency that is owned by the government. The whole ideology of having a free cryptocurrency that's controlled by the people, unfortunately, the people are very fickle. And if people weren't trading it, it would actually have been a very good investment. But people were trading it instead of parking their money in it and using it for monetary exchange, like a credit card or debit card or bank account or actual dollars. And so that's what went wrong with cryptocurrency. You can't have both, unfortunately. If you want a stable dollar or a stable investment, gold is a stable investment when the government backs it by their currency because they put a peg on the price. And they are the only ones that increase it or decrease it based on whatever reasons. So that's when gold becomes an incredible product to hold on to. Diamonds are also a perfect investment. The diamond certificate that's cut in a big, piece of plastic that's the size of a credit card, and it's sealed on all four sides by the Diamond Gemology Institute of America. That's a perfect investment because the price never goes down. So an investment that you fantasize about, what is the perfect investment? It is an investment that never loses value, and that's a diamond. And because the reason why it's so stable is because there's one group of people that are monitoring how many more diamonds they need to put out in the industry. And so by them controlling it this way, it's a stable investment. And so what happens in times of collapses, they don't put out so much diamonds, so the price stays the same. And so on a diamond chart, you will see the price trade sideways in a stock market collapse. In a rising market, you will see the price of a diamond go up, and so forth. And so that's a perfect investment, but apparently my video that I made for the perfect investment, you didn't like it. Sometimes the most simplest things that are put in front of you are actually the best investments that you could take advantage of. Thank you so much for watching my video. Please remember to do thumbs up. There it is. Please subscribe to my channel as well. You're going to get the videos anyway, but if you subscribe and do thumbs up, it really helps me out. Thank you so much.